Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, September the 15th, 2010, and it's time to look at the markets. Okay, let's start off looking at the Dow Jones Industrial Average. Yesterday, one of our users, James, a really good trader out there, he called yesterday as being the peak, and it looks like the market is in fact rolling over. So he may have actually nailed that sucker because today you'll notice we had a lower low in the Dow Jones Industrial Average compared to yesterday. That tells you there's starting to be some weakness there that's developing. Also, today I got an MPT rating of 03. That's my sell signal. Tells me what smart money's doing, and they are now at this level and higher going to be selling this market, which doesn't make any big surprise there. Hey, look, somebody's calling us. Let's hang up on them. Awesome. Okay, check this out. Market has been on the tear to the upside here after an oversold condition of the slow stocks. We told you to expect that and look, use the stop loss limit to block in any gains in case you do get this bounce. You got the bounce here. And now we're looking for the re-entry opportunity, and we think you've already seen it. Any move to the upside here is unsustainable. And again, once the slow touches up the 80 line, you know that's what you should be doing anyway, looking for those short opportunities. Looks like we are rolling over here. I'm not going to call the exact peak. I never try to do that. I'm a swing trader, not a day trader. But in all cases here, looking at this does make a lot of sense once you start getting those lower series of lows. Okay, right here you had higher series of highs, and then you get that lower low. That's telling you look for this thing to roll over, and that's what happened here. And we've seen it before. Back here, you had a series of low points trending higher, 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 and then boom, she shifted right there. Okay, those are really good telltale signs. Right here as well. Okay, and right here as well. All right, telling you it's time to start looking for that reversal, and that's what we're looking for right now. Okay, makes sense to me. Also, you'll notice we are trading above the 200-day moving average. That's been the level the market has had a real hard time staying above ever since the flash crash. All right, so whenever you bounce up to it, you get an opportunity to short it. You bounce up to it, you can't stay up there, you get shot down. Here, 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 and now here again, all right? We can do some little wild, crazy stuff for a day here and there, but the end result is going to be breakdown. And we're going to go back down and fill those gaps on the NASDAQ. We'll show you that in a minute. Quick look here at the Hang Seng Index, 94.82. This is an oscillator. It only goes to 100. So you can start looking for that peak, and you're trading at the upper Bollinger Band line with a two-day combination known as the candlestick pattern right here is known as a dark cloud cover and our hanging man if you prefer to look just today. Either way, those are sell signals, not buy signals. You're finding sell pressure up here at this level. No big surprise there. You've got a bearish divergence in play. That means when you get that bounce that you're seeing right now, right here, you want to use it for a short opportunity because you're going to fall down and you're going to take out this level right here, okay? So right here, that's what's coming. Okay, you'll notice on this chart and a lot of our charts here, whenever I'm really confident on a move, I will put a red arrow on it and say, stick a fork in it, she's dead. Yeah, that's what I'm doing with the Hang Seng today. There we are, okay? Awesome. Quick look here at the FTSE London Financial Times Index. You've got two back-to-back dojis, and you'll notice today's low point was lower than yesterday's low point, again showing that weakness is setting in here. These candlestick formations are showing a lack of conviction by bulls to the upside here. We're basically looking for this to be a rolling over peaking signal, and of course that makes sense. We're overbought on the slow stotch as well. So I think it's time to put a fork in it. Yes, let's put one right there. Okay, awesome. All right, a quick look here at the NASDAQ. This is a chart I would just love to short with about a bazillion dollars. This guy right here has just had 1, 2, 3, 4, 5, 6 consecutive days to the upside. The most for this 6-month chart, anywhere you look on it, is 7. You have had 1, 2, 3, 4, 5, 6, 7 consecutive days to the upside before you get that roll over. And you've had 6, okay? So that's already too many. You might get another one here and there, but you get 7, you get 8. You already know you're at the high end of that number, and it's unsustainable anyway for multiple reasons. Number one, lots of gaps down here they're going to have to fill. You're within about a buck of filling this one here as far as the high of the day goes. So you may go up there and take that high out right there and fill that gap. But again, all these gaps down here are going to have to be filled. You've had 6 consecutive days to the upside. Your slow stotch is up here at 96. Look at the high points back here. Okay, these are extremes. All right, so we're seeing another one here. I'm going to go ahead and stick another fork in it and say this guy is done as well. Quick look here at the Russell 2000. This guy is a messy chart as well. Again, with the bearish divergences. Whenever you've got those, you've got to use the bounces as a short opportunity, and I think now is a darn good time to do it with the slow stotch at 95. Again, look at the peaks, okay? This is an extreme situation. You want to be looking for that guy to roll over here. And again, note a series of lower lows from today versus yesterday and a series of lower highs. Okay, this is more confirmation there, and you definitely want to be looking for this guy to be rolling over here. I'm not calling the exact K here, but I am sticking a fork in it. I'm going to say, yeah, I'll get a short right there. Quick look here at the VIX. We told you about this one yesterday, showing a low point here, a lower low here. That's showing a downtrend. At the same time, a low point here and a low point here is showing an uptrend. Same thing is shown on the RSI, which means we have a bullish divergence. We told you want to be a buyer here, and we agree with that. And today's activity was a close higher than yesterday's close, which tells a confirmation and tells us to go ahead and put one of those blue arrows on it. So check this out. Okay, there you go. Marked it nice and pretty. I'd be a buyer here because I'd be a bear in the overall markets, and the VIX is a good way to check that. We talked about that yesterday. We mentioned several times. Whenever you're analyzing your overall markets, you can double check it against the VIX. The VIX should be bullish when the overall markets are bearish, and vice versa. So if you're seeing one sign, you think you're seeing a sign on the individual U.S. markets, you can always go double check it against the VIX. It should be confirmed, okay? Pretty cool, pretty easy. If you've not been to our free website, it's right there. It's 100% free, and all we ask in return, please refer a friend. Also, today's the 15th, and like we do every month, at the 15th of each month, half of our live trading course is over. We tell you you can now register for next month's live trading course. Anybody who does gets the rest of this month 100% free. So I hope to see you all there in our live trading course first thing tomorrow morning. We'll show you how to read charts for yourself using our method. And let's have a quick look at our disclaimer. The disclaimer, read it and weep. Awesome. If you've not subscribed to our YouTube channel, you need to do that or I'm going to hit you with a stick. Awesome. God bless. Take care. I'll see you all tomorrow.